Hey
Yeah,
guys.
I'm gonna switch to my iPad. This
All
laptop
right.
thing doesn't seem to work that good.
Okay. All right. Well, we've begun the recording, and really, this is a loose knit group of Tastynation and some other traders that we put together. And just we've gone out there on Tastynation on Slack and invited several people. There's probably a few others that are going to join us along the way. No real particular agenda except just to kind of hear how your week went, what kind of things you're trading, what are you learning, any of that's fair game. And a few of us have met previously. I think you weren't with us before, so Alex is kind of a newbie here. So that's it. So maybe let's just start off with what were you doing this week? What kind of trades were you making?
Why don't you kick it off, Dale?
What?
Why don't you kick it off?
I'll kick it off. Okay. Well, today I was trading SPX, which is I do every Monday, Wednesday, and Friday, a 0 days to expiration. So in a nutshell, there's I think two different camps. David Sun and Tammy Chambliss are kind of the thought leaders that are out there now in this space, among others. Tammy likes to buy the wing, so essentially she's trading an iron condor. And David's Sun likes to trade it naked. It takes a lot more buying power. So what I do is I sell the 8 delta and then buy the 50 wide wings. It takes about $5,000 of buying power per contract. So it does take a lot of buying power. And today I had one of my, I think, the best day, but I traded more contracts than I have before.
How much you make?
$6,000 in 5 accounts. So not total. Out of the 5 accounts, I made a total of about $6,000.
Yeah, I think I recall you on a good day it's a couple grand. So that is pretty good. That's pretty good.
And I started off in the morning trading about 10 contracts in 3 different accounts. And then I trickled on a couple here, a couple there, kind of almost adjusting delta along the way. If I saw a big drop down on puts, I'd do another couple puts. If I said a big move up, and I'd sell a couple more calls. So probably ended up in 4 accounts, a total of about probably 35 contracts.
So let me ask you, if you had a 2-3 times larger day than average, were you bigger today? Like did you put a lot more leverage on today, or?
Typically I might trade 28 contracts, and today I probably had 36.
Okay, so you're increasing your size.
I increased the size, but I didn't do it all at once. I kind of did a little, I don't know what you'd call it, dollar cost averaging, or, you're kind of spreading your risk out by coming in at different times throughout the day. So, and I didn't get stopped out at all. On Wednesday, I still made a profit, but I got stopped out once on the calls.
Nice.
Yeah. So that's kind of, I was trading a few strangles. I think I traded a United Airlines strangle today or yesterday. So that's kind of it. Let's see, John is back in. So anybody else want to kind of tell us what you did this week and how things worked out?
Metals.
Timothy are you gold bug, silver bug, all bugs?
Oh, so wait, hey, didn't silver take a huge drop this week or something like that?
Yeah, everything did. Yeah, I made money in gold last week and lost it all in silver this week. Complete disaster.
What do you think's driving the price? I saw a little bit of Slack, some of your theories on that, and I was just asking you a question that I'd already heard a little bit of the answer to, but thought you.
Yeah, I think it's from all these. I'm just repeating what I've heard in these podcasts that I'm listening to. I'm kind of expanding. I left Pomp behind me, and now it's like Grant Morrison and I forget the other one is, but anyway, they're talking about cash is cash is trash. Like just holding cash, you're going to get that. Inflation wrecks you. If inflation ever happens, that's the other thing. They're debating whether inflation is going to happen at all.
Right.
And then one guy comes up and says, "Oh, any case where you had a pile of debt and low interest rates and all this money printing, it's never resulted in inflation. In fact, it's stagflation or deflation. Even though you'd think the opposite, it's not the case historically. And so the idea is that gold is basically saying, fuck off, Fed, and we're just going to buy gold because it's an actual it's an actual asset. So if inflation hits, your value of your gold goes up. So that's the current thoughts that I picked up by listening to these podcasts recently, that these financial guys are talking about. So gold goes up, silver kind of goes with it. They always seem to move in tandem. So anyway,
Tim, how are you trading them? Are you using what strategies are you using?
Well, on silver, gold actually, it was a covered call. So I put on a gold future, and then had what I thought at the time was, there's no way it could hit 1980. I got it in 1930 with the long contract, and put a call in 1980, like, it's going to take forever to get up here. Of course, it did it in like a week.
So you're trading gold futures, like /GC?
Yes.
Okay.
Yes.
How do you cover that though?
You sell a call.
Yeah, you're buying the future and selling a call against it.
Yeah, because there's gold futures options.
Okay, gold futures options. Okay.
Yeah, so I got it in 1930, and I immediately sold the 1980 call, and it basically rolled over the call in like 3 or 4 days, and I didn't wait to max profit. I got out I made $6,000 on it. I figured, this is good enough, just good enough. I shouldn't push my luck. And then I had a strangle and silver going at the same time, and that took a little longer. Except it was going to roll over. I thought it was going to roll over my high side of my call. So I'm like, I'll turn this into a covered call as well. And like a couple days later, it shit tanks, and now we're back down way below. And I just like, all right, I don't know what's going on. I can't even hold on. So I'm trading way too big, and I'm just that's my own fault, and I keep doing it. But I'm just shooting for the moon right now, just because I can afford it, so it's kind of like, whatever. Anyway, I got out of it, and now I'm just trying to do damage control. So I got even wider strangle on now just to recover some amount of it back. And that's just been my fight all week. So That's it for me.
Well, I've sold some strangles before in /GC, as well as I've gone directionally on SLV, the Silver Fund, in some buy and hold kind of accounts. But yeah. All right. Who wants to go? And Mace is joining us, I think.
Yeah. I actually just joined the room this week, or maybe late last week. And so I'm new to the zero to expiration date, what was the other one? Iron Flies.
Okay.
But actually, this was a good week for me. Again, I started small.
Gotcha.
Because I wasn't used to it. So Monday, Wednesday, and Friday today, I'm up 700 on one contract basically. This was my first fly on Wednesday that I did, so I'm a little iffy about those now.
Is it too early to tell if you prefer iron flies or iron condors, or are the jury still out on that?
Well, I think right now, because I had more winners this week on the zero date to expiration process than I did the iron fly. I lost the first iron fly and only iron fly.
Okay, so you're not doing iron flies on SPX on zero DTEs?
No, I am not.
Okay.
That's the one I did it on, though. That's
Gotcha.
the one that I did lose.
I know Tammy Chambliss is starting to experiment also with iron flies in SPX on zero DTE. So that's kind of what initially I thought you were alluding to.
Yeah. And, so Tuesdays and Thursdays, I want something to do.
Yeah. I know. I experience sometimes Tuesday and Thursday. I just feel a little lighter because I'm not doing those SPX.
You can still trade them. There's still lots of. You obviously not waiting till you never trade them overnight, but I've actually have done it where I'm like Tuesday or Thursday, I'll go ahead and put some on anyway. A lot of them will come out. They'll be cut in half.
Yeah,
So
actually,
how
Tim,
do you trade an iron flyer and iron condor in the one DTE?
Oh yeah, you're gonna be spreads, of course. Yeah, they're gonna be
yeah, I actually
a
put a
iron condor.
I actually put a paper one on yesterday, and it would have been a winner if I closed it by the end of the day.
Mhm. When you guys do these O days, I call them O days, not zero DTE.
O days, I like it.
O days, and do you use the expected move at all to position your short strikes?
No, I personally went in with a 5 delta on both sides.
And I go in with I sell the 8 delta, and I buy the 50 on the puts. I buy the wings at 50 points out. On the calls, usually I can get 30 points out.
Right.
Yeah.
So it's using about
Del-
$5,000 in buying power per contract on the puts, and maybe $3,000 per contract on the calls.
Mhm.
Yeah, this afternoon I did 12 deltas. So I won on both AM and PM.
I think the
Delta
sweet
is
spot for me is between 7 and 9.
Okay.
What were you saying, John?
I was saying that delta is like a magic Greek, right? It adjusts for all kinds of situations. So it's related to expected move, right? It's related to whatever volatility is in the market, et cetera.
And I've probably already told you more than I know on that topic, John. I consider you to be kind of the mathematician in the crowd. For those of you who haven't met Mr. Yoke before, he's kind of knows a lot about kind of the math and how a lot of these are calculated. But for me, it's just I'm adhering somewhat to what Tammy has done in terms of her back testing. And for her back testing, she didn't show a lot of probability difference between the 7 delta and the 10 delta.
Right.
And it's a moving target, as you guys know that have tried to trade it, because SPX moves around considerable amounts. So, you wait 30 minutes and the deltas are different. So if you haven't gotten in the first 30 minutes, a lot of times I'll go back and look and see what the new deltas are and kind of change the strikes.
The thing I'm most interested in those zero DTEs are the drawdowns. Like when, I would like to know, how your stop losses, how your stops, how well they work when the market moves, like drops 2%.
And
in the middle of the day.
My answer to that is I'm setting up a three times stop loss, 3 times the credit received. And in the past, I've made a mistake by making those trigger and stop too tight, and it blew past it. So for me, that sweet spot is about 30 cents between my trigger and my stop loss. So for example, if I set a trigger at $2.10, the top would be $2.40. And it hasn't blown past my stop loss yet, which happened once before to me when they were too tight.
Yeah, 3X is good because what happens is it actually changes throughout the day, I've noticed. So early in the morning, again, Pacific times or whatever. So like 8, 9, 10 o'clock, any move down or something would just cause crazy price swings in my puts. And if you 3X is it almost may not even be enough. Like it seems weird, and you just have to. I never really seemingly have the discipline to do it, but like I had this really great month doing all this stuff, and then in January everything went to hell in a handbasket. But it felt like 3X was what you just got to put up with. But it really sucks when you end up 3 days in a row where you get stopped out on both sides. Like those are the worst days where you get stopped out, 3X loss, both sides. Like you're like, oh, well, at least I got my calls to save me. And then, then it swings back the other way. So my plan started to become like, as soon as one side stops out, you take whatever you have on everything and you get out for the day.
Okay.
That's what I ended up doing. Again, these are all, it's all really crappy empirical and feelings and all of this stuff, but that's kind of where I ended up with. Before I'm done with them. I really hated being stopped out on both sides, I just couldn't win. It felt like after a point.
I think I'm a lot more stubborn. I tend to put another one on.
Well, work great for a month. That's And low IV. That's like if we ever get back to 12 or 14 on the VIX, oh yeah, I'll do them again.
Gotcha.
But anything above 15, nope.
Well, I've heard people expressing frustration because of how little they were collecting, because they were kind of spoiled by these dollar premiums they were getting when the VIX was higher, and now they're kind of spoiled that they're just getting 50 cents.
Oh, I usually get $1, so I try to get $1 per spread. Oh, yeah, sorry, go ahead.
Premiums drying up. I just checked the SPX expected move for next Friday. It's hard to believe it's only $51.
The VIX is at 22, right? It's almost going to break 20. If that does, I'll be shocked if it goes below 20.
Yeah.
No, don't be shocked. We're going back to 14. Come on.
I mean
yeah.
Timothy, you're always a directional guy.
Does anyone believe that the one standard deviation move for next week is $51? I doubt it. I think the options players have it wrong.
Well, I don't know. I learned a long time ago, don't believe in anything.
I tend
happens and play that.
Yeah, I tend to adhere to nobody knows anything, but
I'm a believer of the market's 100% right, always.
Right,
we're
exactly
not.
Right.
All right, so we've talked a considerable amount about kind of zero DTEs, a little bit about the commodities, silver and gold trade that Timothy has talked about. All right, who's next? Anybody else want to tell us what you've been doing or what you're learning or what you're struggling with?
I'm just here as an observer. I'm a stock trader, so
yeah,
a lot of this is foreign language to me. I understand the basics, but
I know both Kip and Alex we got a options trading competition kind of for newbies and for learners, and they're taking part in that. They can either play for free or we're doing it like a poker tournament where people can buy in and compete around it, paying a first, second, third place. People are playing for free. Obviously, they aren't a candidate for the prize pool, but we're hoping that it kind of leads them almost as a flight simulator to learn about how to do some of this stuff without risking real capital. So anybody else?
I've been day trading NASDAQ futures.
Okay.
I play around over at TheoTrade also, not just Tasty Trade. And Tony Rago is over there. He has systems for trading, intraday trading of NASDAQ futures. So I've been concentrating on that.
Automation or manual?
It's all manual.
Yeah. Yeah. I've just started dabbling with the NQ. Right now I'm just trading a micro as I'm getting used to it. The swings are pretty violent though. I was actually in a short earlier this afternoon and had a really nice profit and put a stop at break even, and the sucker swung up, hit my stop, and then turned and dropped 50 points.
Yeah. Well, Tony, I'll give you a brief overview of how the Tony system works. He has fixed levels in every 100 handles of the NQ, like 66, 77, 20, whatever. And what he does is he has rules for getting short or long at these spot levels for entry.
Yep.
You have a fixed stop out of 4 handles. He enters with 2 contracts. When he makes basically 4 handles on the 2, he closes 1, and he calls that risk out because he doesn't let the second contract go below 0. So it's not a loser, and he'll let the second contract run, right? So it's not very complicated. It's a little detailed, but not very complicated.
John,
it's amazing.
Would you consider the Theo trade a technical trading?
I guess so, yeah.
Okay.
Yeah, he's a chart guy. Yeah, he's all about bands and drawing lines and stuff.
Well, you've got Corey Rosenblum, which is, he's got TA all over the screen. And you've got Don Kaufman, who has none of that. He's just looking at implied volatilities, trying to select the best kind of position for the circumstances. You know, what's he going to do in SLV right now? What makes sense?
Mm-hmm.
So he's looking at implied volatilities. Where's the skew? You know, does this make sense? Does that make sense? He doesn't want to see any markups on any charts.
Right.
Tony Rago, like I said, has just taken, you know, 3 handles here, 3 handles there out of the NQ and doing that all day, or attempting to do that. Slim Miller's over there with his cycle analysis.
Sounds like you've got a pretty good idea of kind of the foundation of philosophies in this space. I know you've done a lot of work on correlation, and I've seen some of the stuff you've posted on our Slack channel, right, about correlation. Anything you could say to us as lay people? I mean, without getting too technical. Yeah.
Correlation's one of my hot buttons.
Yeah.
I think I've said before, and I sent around a note to some people that when Tasty Trade talks about correlation, I think they've got it about half right. Right? They talk about correlation of price movement of underlyings, but the real thing that we're worried about is correlation of P&L day of the various positions that we put on.
Yeah, actually, that's a good point.
Right? I don't know, Mike, if you've seen that note I've sent around about, I called it correlation for options traders.
I have. I've seen the article.
Yeah. So again, it's not about price movement of, let's say, SLV versus SPY. It's about the kind of positions you put on in those underlyings, right, and how the P&L day changes.
Have you found a way to measure that?
Yeah, I think it's a lot more complicated to do. You know, if you have their database of option stuff, right, you can do it. It's just probably like four or 5 times more complicated.
Sure.
To figure out, you know, if I put on a 16 delta put in SPY and a 16 delta put in TLT, what do those positions look like separately, and what do they look like combined? And what's the correlation of the daily P&L, right? Yeah. That's what I'm talking about. If you only look at the underlying price, you're ignoring everything else that has to do with an options price. And particularly there's time and volatility and the structure of the position.
Because if you can construct different options trades that are completely not correlated, and then the correlation of underlying means nothing, right? And unless you know how to correlate them using the right strategies, taking into consideration volatility and all that, it's kind of useless. Is that kind of what you're saying? That
yeah, I think so.
A lot more to the picture than just the underlying movement.
And if I was to kind of just summarize in a few bullet points, I think what Tasty Trade espouses is to get diversification in the types of trades you make, the underlyings, trade small, trade often. You know, it's just kind of these things that help you.
Yeah, but there's no proof that any of that reduces. Well, there's a tiny bit of proof that produces a reduced P&L day at the portfolio level. Volatility of P&L day. You want to make money, but not be too volatile.
Sure.
They have not proved it.
Yeah.
And then lately they're talking about correlation and pairs trades, and I think they're way off.
Okay. Well, how do you operationalize it for yourself in your own trading?
I don't use correlation because I tend to focus on S&P products.
Okay.
I'm more of a focused index trader.
Yeah.
What are you looking at for your technically chart-wise for your decision making?
Or are you?
S&P trades?
S&P or even NASDAQ, yeah.
I keep, well, for S&P trades, I keep static negative delta on through MES, and I sell SPY put spreads against it. And basically, I use discretion about how wide I want those put spreads to be and how far out of the money I want the short leg to be. I wrote up a slide deck on that also. I call it MES, MES covered put spreads. You see, here's, we'll get back to that in 1 second. Here's the evolution. When I first learned this, I was selling naked ES puts for years, making good money. Until one day I had a $75,000 intraday drawdown. That was not fun. I made up most of that over the course of the next few months. Then I figured out that I should switch to SPY, and then that I should do SPY put spreads out of the money. And then I got into this concept of the static negative delta to cover some of that, right? Because Tom's always static negative and this and that and whatever. So I put together a little calculation that says, if I structure my put spreads one way, I have a certain way, I have no downside risk. If I structure them a different way, I have a little bit of downside risk. So I know how to modulate the put spreads according to what I call down and wide, how far down out of the money and how wide I want the put spread. And that's all I do. I keep rolling these put spreads. And I sell them between 6 and 9 DTE. I just keep doing that. And the only time that that system is stressed is when the market just goes straight up. And that's been the situation that we have.
Sure.
So instead of making $100 a day, I'm losing $100 a day.
So your decision making is purely based on this delta, negative delta?
Negative beta weighted deltas.
Okay.
Well, think of it this way. I want to sell put spreads because I think it's a good way to trade.
Right.
So then I need static negative delta. How do I structure that?
Otherwise, you're way more bullish than you'd like to be. Is this the reason you're hedging it with your negative delta?
No, I don't want the market to crash and take away 50 grand again.
Okay.
No.
You're protecting yourself against that $75,000 drawdown that you had.
Right. Yeah, and it seemed like an interesting thing. So I did all these calculations on my own, and I came up with this formulation. I put it in the slide deck, and I think I've shared it with you, Dale, and a couple of other people.
Sure. Well, good information. Anybody else that, I know we were kind of setting this discussion almost without an agenda, but the agenda is just kind of figuring out how you're trading, what you're into, unanswered questions. Is there anything else that you guys wanted to discuss in our roundtable today?
The other, my main topic was how I got destroyed this week, but also the good times were had in ags. I like trading corn and wheat and soy. Corn hit 309, and now the storm hit, and we're at 325, so I made a little money there. And then nat gas has been on a tear straight up. I've had strangles on, and that has not worked out 100%, but it's one of those things like I wish I should have, because gas is at 1.5 and the futures price curve for the rest of the year has done nothing but gone up. So just I would not have calls on right now in that gas. And the other thing that seems to be interesting is the interest rates. And so that affects, ZB and ZN, which are the only ones that really seem to have any money in them anyway. But interest rates are actually going up right now. So that was a surprise because I expect them to actually go the other way because I thought the Fed was wanting to move them towards zero. So I think for now, a good plan is also to have wide strangles on in ZB because that actually can return on capital is pretty good in there. But it has to be really wide, like 176, 184 or something. And then you can always kind of roll down or roll up as you go on, but be really careful with that. But it still seems like a decent amount of money for the return, and you can put spreads or whatever you want to reduce your buying power. But
Timothy, I have a question. What percentage of your trades would you say that you do in futures?
That's most of them. Like I think
Majority?
yeah, because what happened was when I went back into stocks thinking I knew something is when I got destroyed. So,
Okay.
Yeah, I seem to, for whatever reason, I do better with commodities, and so I'm trying to gear back up on those.
Are you guys familiar with the 60-40 rule on the way tax treatment goes for futures as well as SPX?
Yeah.
That's why I like SPX.
Yep. Okay.
Yeah, that's another reason to trade futures, and there's no pattern day trader nonsense in futures.
Okay.
So you can go nuts in there. It costs you a little more, which is why I was interested in the CME seat. But maybe when I get my portfolio back up, I might maybe get more interested in that. But yeah, it can get pricey.
Yeah, that makes sense. But I wasn't aware that pattern day trader, it doesn't apply to that. But
yep, they somehow forgot that in the law because they don't know what they're talking about when they write these stupid laws. But anyway.
Hey, John, question for you. You said you just started trading NASDAQ futures. What are you following for your decision process?
Tony Rago's system has a pretty structured set of rules about what a long setup is or a short setup, right? And how to do the risk out trades and disaster stops, that kind of stuff.
But for triggering, I mean, does he have specific like pivots or? Yes,
there are in every 100 handles of NQ, like at 06, 18, 26, 56, 66, 77, 96. Those are the only levels, for example, that you're allowed to enter at, either long or short. He calls those spots.
Is this something something that he publishes, or how can I learn about it?
He did a class for TheoTrade subscribers. I'm a subscriber. Yeah. He did the class, and he's done an hour every day this week for follow-up. So technically it's, proprietary material. I mean, we can talk offline. I can give you a bunch of details if you want.
That would be great. I appreciate it.
Yeah. Well, guys, I appreciate this roundtable discussion. I don't want to make them too long because then everybody kind of says, well, I don't have time for that. So in the future, I'd like to have, this is the second one. John and I, initially there was, and it may be a kind of revolving door where we have more and more Tastynation join us. But it's always a privilege to me to kind of find out what people are doing and meet other people and collaborate. So thanks everybody for your time today. Is there any other closing remarks anybody wanted to make before we close it out?
Thanks for setting this up, Dale. Appreciate it.
Yeah. Thanks, man.
Yeah. I could go a few more minutes if anybody wants to. Kip, are you in the Slack group?
I'm not. No.
I'll send you an invite, Kip, if you'd like it.
Okay.
Okay.
Yeah. Once you finish the recording, I'll go in a little more detail.
Okay. Let me go ahead and I'll stop the recording now, and then you guys can talk freely.